Welcome back, Focus learners, to another explainer. Today, we're deconstructing a massive, undeniable shift in the semiconductor landscape. We're looking at Broadcom's phenomenal Q1 2026 financial results, but more importantly, we're really dissecting the underlying mechanics of exactly why they are breaking out. If you've been tracking the AI infrastructure space, you know it's evolving incredibly fast. But Broadcom's recent moves, well, they're fundamentally changing the math for how the market values custom silicon. Let's get right into it.
Okay, let's dive into this. 106%. That is Broadcom's year-over-year surge in AI revenue for just the first quarter of 2026. They didn't just inch forward here. They absolutely leaped, hitting $8.4 billion in AI semiconductor revenue in a single quarter. This explosion in growth caught even the most optimistic forecasts completely off guard. But to really understand where this is heading, we need to look at what leadership is signaling. CEO Hock Tan recently stated they have a line of sight to $100 billion in AI chip revenue by the end of 2027. Take a second to really absorb the gravity of that projection. He's not talking about total company revenue. That is just for AI chips. For a market that has been so intensely fixated on off-the-shelf GPUs, a projection of this magnitude fundamentally reshapes how long-term investors have to value the custom silicon pipeline. So here's our roadmap for today. First, we'll look at Broadcom's AI revenue explosion. Second, the custom silicon duopoly. Third, networking for gigawatt clusters. Fourth, we'll unpack those Q1 financials. And finally, what all this means for capital returns for you, the investor. All right, part one, Broadcom's AI revenue explosion, or what we call the picks and shovels of AI. You see, Broadcom isn't out there building consumer AI models or selling branded GPUs. They are the ultimate picks and shovels play. They sell specialized infrastructure directly to the hyperscalers, the massive tech giants actually building the cloud. Their custom accelerator business is the spearhead here, growing an unbelievable 140% year over year. And what you really need to take away is that this isn't some one-quarter anomaly or a sudden spike in inventory. This is a sustained trajectory driven by multi-year contracts with companies like Google, Meta, Anthropic, OpenAI, and now Apple. Broadcom has locked down supply agreements through 2028. That's a level of production certainty most direct competitors could only dream of.
Which brings us to Section 2, the custom silicon duopoly and its structural advantage.
Now, what's really interesting about this is that the custom silicon market is structurally a duopoly. To understand why, we have to look at this design enabler model. Broadcom operates a capital-light platform. When a hyperscaler, let's say Google, wants to build their own chip like the TPU, they don't do it alone. They partner with a design enabler like Broadcom. Broadcom brings the intellectual property, the design services, and the networking silicon to the table, while the hyperscaler absorbs the massive manufacturing and CapEx risks. So Broadcom captures all these high-margin licensing economics without having to carry that heavy balance sheet intensity. It's brilliant.
And in this duopoly, Broadcom is literally the undisputed heavyweight. They command roughly 70% of the custom AI accelerator design services market, anchored by leaders like Google and Meta. Marvell sits in that secondary position with about 20 to 25%, primarily working with AWS and Microsoft. Because of this totally dominant position, Broadcom has amassed a staggering $73 billion committed customer backlog. I mean, let that sink in for a second. $73 billion. That gives them multi-year revenue visibility that is just almost unheard of in the traditional semiconductor space.
To see how deeply embedded Broadcom actually is, just look at their newly expanded partnership with Meta. They've signed a multi-year agreement through 2029 to co-develop Meta's custom silicon, the MTIA. This includes rolling out the industry's very first 2-nanometer AI compute accelerator. We aren't just talking about plugging in a few racks of servers here. This initial rollout exceeds 1 gigawatt of infrastructure and is all built on Broadcom's foundational XPU custom accelerator platform, which tightly couples logic, memory, and high-speed input/output.
Okay, moving on to Section 3, networking gigawatt AI clusters and breaking the bandwidth wall.
Because look, compute is really only half the equation. Data bottlenecks are the true enemy as we scale from megawatt up to gigawatt infrastructure. Enter the Tomahawk 6 switch. It delivers a massive 102.4 terabits per second of switching capacity. To put that into perspective for you, imagine transmitting tens of thousands of HD movies in a single second. It supports ultra-high-density 800 gigabit and 1.6 terabit Ethernet connectivity. But perhaps most crucially for these gigawatt clusters, it utilizes the Bailey co-packaged optics platform. This integrates optical engines directly with the switch silicon, slashing power consumption by up to 70% compared to traditional pluggable optics. In a world where AI data centers are literally starving for power, that efficiency is a game changer.
All right, Section 4, Unpacking the Q1 Financials. The proof is in the numbers.
So, the crucial point is, how does this hardware dominance actually translate to the scoreboard? Well, Broadcom's total net revenue jumped to $19.3 billion. That's a 29% overall revenue jump year over year. The semiconductor solutions segment specifically grew by an incredible 52%. These numbers rapidly validate the immense capital that hyperscalers are actively pouring into Broadcom's infrastructure solutions.
But, as the saying goes, revenue is vanity, cash is reality. In Q1 alone, Broadcom generated over $8 billion in free cash flow. This is an absolutely critical distinction for your portfolio. Broadcom isn't some cash-burning startup chasing AI growth at any cost. No, it is a highly optimized, high-margin cash machine that just happens to be growing its fastest segment at triple-digit rates.
Let's break down these core financial strengths and why they actually matter for you. Their gross margin sits at an incredible 78.6%. Think about that for a second. Because of their capital-light design enabler model, their margins actually exceed traditional heavy CapEx integrated chip makers. Adjusted EBITDA hit $13.1 billion, which is 68% of their total revenue. And you can't overlook their infrastructure software. VMware contributed $6.8 billion this quarter alone, completely solidifying its role as the default private cloud abstraction layer for enterprises deploying these massive AI workloads.
Which brings us to our final section, capital returns for investors, the shareholder reward.
And this brilliantly illustrates management's game plan for all that cash. For the long-term investor, the ultimate question is how they allocate that $8 billion of quarterly free cash flow. Well, their two-pronged strategy is wonderfully aggressive. In Q1 alone, they returned $10.9 billion to shareholders. This is anchored by a massive new $10 billion share repurchase authorization running through the end of 2026, right alongside a steady quarterly cash dividend of 65 cents per share.
Let's quickly review the mechanical value of this for your long-term portfolio. By executing a $10 billion buyback, Broadcom is actively reducing the overall share count out there in the open market. This means every single share you hold represents an increasingly larger slice of this highly profitable company, which structurally drives up your long-term earnings per share. It's this beautiful compounding effect fueled directly by their AI hardware dominance.
So I want to leave you with this thought. The industry is rapidly moving way beyond the initial frenzy of megawatt AI clusters, and we're entering the true era of gigawatt-scale custom infrastructure. As hyperscalers desperately try to scale up their models while fighting off power and bandwidth bottlenecks, who holds the ultimate, highly profitable key to making it all work? Thanks for joining me on this explainer, and keep learning.